Welcome back. My name is MrSchroeter, and I want to thank you for tuning into my channel. Please make sure that you subscribe to the channel. Hit that join button. Join the channel membership. Make sure that you are tuning into all of our uploads, the previous uploads that we've had, as well as our new uploads. Ring that notification bell. And don't forget to subscribe to our other channels, the Nigel Schroeder Show, which is my podcast, as well as the Credit Sensei, which is my other channel, where I'm giving you guys all types of tips on building your business and personal credit. The Cash Couple is another great channel that we have where you're going to get to see some behind the scenes action with myself and Crystal. And don't forget to go back and tune into some of my shorts where I give you guys some of my keys to success and some quick credit tips. Check out our playlist as well as our previous live streams. And with that being said, go ahead and sit back and prepare for the show. All right, welcome back, everyone. My name is Nigel Schroeter, and I'm here to talk to you guys about securing credit funding and how you can secure credit funding with little to no money and be able to secure thousands of dollars in the six figures in credit funding. So one thing that you have to understand before we get into this video is I've been doing credit and playing this credit game for years now. I've worked with thousands of people, secured people hundreds of thousands in funding, altogether millions of dollars in credit funding for people. And in doing so, I've learned certain tactics to be able to take advantage of the credit system that others may or may not know, but they're not going to tell you for free like I am. So let me go ahead and give you guys this advice that's going to be able to get you from $0 easily to 20, 30, 50, $100,000 in a year, depending on your current income and where you're currently standing in your credit score. So here's what you need to understand before we begin. Credit is all about building relationships. It's all about you having a good relationship with your banking institution. So your credit score is merely just a number. Your credit profile is the important aspect. You want to have a well put together, strong credit profile because your credit profile is going to show banks those relationships that are going to make them give you the money. The score is just a number to represent what is actually listed on the profile. So what does that mean? Credit scores are based upon varying credit factors given to you by FICO. One of them is how much of your current credit that you have available to you are you using. So what do you need to know about that? It's extremely important to know that it's okay to use your credit, but you really don't want to utilize any more than 10% on any individual account. I personally don't like to follow the 30% rule that most people will give you because 10% and below is going to give you your optimal credit score. 30% is going to be a threshold to where you're going to start seeing your credit score drop slightly. So I think it's better to keep yourself in that 10% range. So if you do happen to slip up, you'll still be below 30% and you can still go apply for another card and straighten your situation out by pulling your balances out over multiple cards. Now, with that being said, we have to realize that our second, that's our second factor. Our first factor is your payment history. Are you paying your accounts on time? You want to make sure that you're paying your accounts on time every single month, even if you only pay the minimum balance. Now, am I recommending that you pay the minimum balance on your accounts? No. I want you to pay over the minimum balance on your accounts, because paying the minimum balance on your accounts is going to stretch out how much you owe over such a vast period of time that it can almost become impossible to pay them off if you're stretching your accounts out. Now, personally, I don't recommend carrying balance on credit cards at all, but in the instance that you have to, that is my recommendation, is to make sure that you're at least paying the minimum balance and you're keeping them below 30%. Now, credit inquiries. Credit inquiries are not going to affect your credit score gravely. What they're going to do is they're going to affect what's called your risk score. The more that you apply for credit, the more that banks think that you need it rather than you want it. So when banks feel like you need the funding, they're going to steer clear of lending to you. So if you keep your inquiries down, it will make it easier for you to obtain funding and get lower interest rates. However, it will not deny you from getting credit. So when you are applying for credit, if you start applying rapidly, you can get slowed down. The banks will tell you, hey, we're not going to approve you right now. However, you come back in a couple months and we will approve you. So always remember that this is a long game and it's about time. Time is one of your most important assets in this credit game. The longer that you can wait, the more money that you can get. So now let's think about what else is on our credit report. We have credit mix. What type of accounts do you have? Can you pay installment loans? Can you pay credit cards? What can and can't you pay? By determining what you can and can't pay, or the types of accounts that you manage better, banks determine what types of credit they're going to lend to you. This is why it's important to have 100% payment history on all of your accounts, as well as have mortgage loans, auto loans, as well as credit cards and personal loans, because banks are going to look at that diversity to see that you have different types of accounts. And when they see that you have different types of accounts, they're more apt to lend to you. Now, what else are banks looking for when they're lending to you? Banks want to see that you are going to keep a good relationship with them, as well as you have a relationship with another bank. Remember, banks are in competition. So if they're in competition to give you funding, it's important to look at having relationships with multiple banks. Because if one bank gives you $10,000 and you go to their competitor, they're going to give you 10 or 15, because they're going to match or raise their competitor based upon their tolerance rate, because they want your service. So with that being said, once again, my name is Nigel MrSchroeter. Please make sure that you guys go over, follow me on TikTok, follow me on Instagram, get some more of these credit gems, and allow me to give you guys the straight guidelines and the straight maps, so that you don't have to waste your time figuring out all these things that I've already got figured out for you. And please make sure that you also hit that subscribe button, and we'll see you guys in the next video.